My life's ambition in property has been to own 1,000 buy-to-let properties. But I've changed my mind. Here's why. According to Healthy, Happy, Impactful, over 72% of those that achieve their goals do so by writing them down on a daily basis and sharing them with a friend. Why am I even saying this? Well, in order to achieve any form of result, you need to get clear on what your objectives are so that you can move towards them. In fact, I do this on a yearly basis. In December, I sit down for 2 days over the Christmas period and map out what my goals are for the next year, and I actually come up with a name to represent the year with a core focus. But the truth is, as you go through and you grow, you need to shift your pattern. So let me go back to the beginning of why I set the goal in the first place. When we set goals, we need to make sure they are smart. What that means is specific, measurable, achievable, realistic, and timely. We need to make sure they're time-bound, otherwise they are just a dream. So when we're setting this goal, you need to think about the why of why you're doing it in the first place. For me, I was just obsessed with helping as many people have homes as much as possible, and really I just put an arbitrary figure of when I thought, do you know what, you're really making a meaningful contribution and hopefully making a fuckload of money in the meantime. And so I set this arbitrary figure of owning 1,000 buy-to-let properties at 50% equity. Don't know why, just thought, yeah, that sounded really cool. Over time, I learned the power of leverage, right? And why would I pay off 50% of the debt when there's no need to whatsoever? It's being overly cautious, and so completely shifted that to 1,000 buy-to-let properties with 75% loan to value. Genius, right? Now, the problems come through scaling, which brings me on to diversification. I think the benefits of diversification are pretty obvious. You know, de-risking yourself, giving yourself different opportunities, the ability to develop and adapt as you grow. But really, it comes through phases. So if you go at the beginning of your journey, if I've got 100 grand, which isn't a lot of money in the grand scheme of things when we're talking about property, then I don't really want to put that at massive risk, personally speaking. So I am not going to be going into serviced accommodation, rent to rent or rent to SA or lease options or things like that that come with different complexities. Instead, I'm going to go for my favorite, boring, vanilla buy-to-let properties. And that's really important because when I'm putting the money, it's not just the return on the investment, it's return of the investment that's important to me. But as you start scaling and you're bringing in more money, you refinance and things like that, why not have a bit of fun? Why not get the old serviced accommodation? Why not get a HMO? Why not look into holiday lets? Whatever you want to do to have a bit more enjoyment value through your investment journey, but know that it comes along with risk. And at the beginning, risk is not your friend. The next thing that we look at with diversification is that as you develop your portfolio, you rely less and less on your job or your day-to-day. And so a lot of people end up either quitting their jobs or they go, do you know what, I'm going to work 3 days a week. And then they want to get more active into the property investment field because they're starting to enjoy it. So they might go, hey, I want to do a bit more of an active income stream. This could come from deal packaging, which is my favorite, and we do a decent amount in that. Or it could be flips. It could be doing a development. It could be doing a rent to rent where you're more actively involved in the growth of it. And it's more of a business, a property business, rather than a property investment. And so that's another way to diversify. Finally, it's how fast you're growing. So if you think about my situation now, we're at the point now where when I started about 10 years ago, I'd be buying one buy-to-let, say every 4 months, 5 months, then you'd build up and build up and build up. Well, now we've got the businesses that make about, say, 500,000, 600,000 a month. I've got more capital to reinvest and reinvest, and I don't actually touch any of that money. I know that probably sounds weird, but I don't hold cash in the bank. I don't take it out and frivolous, crazy holidays. Maybe the odd one, and I do like my Aston Martin, to be fair. But outside of that, I plow it into investments, plow it into properties. So we're kind of buying about 5 or 6 properties every single month. That's 5 properties I need to find, 5 properties I need to negotiate, 5 sets of legals, 5 sets of arsehole valuers going up and down value in the properties right now, 5 sets of refurbishments and 5 tenants. All of that is like, I am suddenly a bloody lawyer, sat down, drowning in paperwork. So why don't I, instead of buying 5 a month, why don't I spend the next 6 months finding a freehold block of 40 units? So I own the freehold and I own each individual leasehold flat in there. That way, I can do one set of sourcing, one set of negotiation, one set of legals, one contractor to go in and do the full refurb, and one agency, happens to be my estate agency and my letting agency, managing the whole block. Sounds a lot easier. So am I not interested in boring vanilla buy-to-lets? Absolutely, I am all in on boring vanilla buy-to-lets with a jab of steroids, and that's what I'm doing right now. I'm still buying the 4 or 5 a month, by the way, but I'm not really having my core focus on it as much anymore, especially as I've got all of my clients to facilitate. So what's ended up happening is I keep on missing out on all the bloody opportunities because you keep on buying them, which I'm happy to do, because then what I'm doing is buying these bigger blocks in boring vanilla buy-to-let style. The next shift comes from your financial consideration, and do I vent about it? I'm going to vent about it. I think because of the gurus out there, I know I've got a training company, I'm one of the arseholes, right? They talk about all this like, quit your job from property, do this, do that. It's like, so people have got it wired in their head that it's the cash flow from property that actually allows us to make a load of money. That's simply not true. The cash flow is just kind of a benefit, almost a dividend from having the share. The value in property, 80% of it comes from capital growth. And by the way, you access that by doing refinances tax-free, which also is a massive benefit from that, okay? But what happens is your consideration changes through time. For example, if I could buy a block of flats right now, and let's simplify actually, let's say a buy-to-let, 1 unit buy-to-let property in a really good capital growth area, I would happily pay out every single month. So say I'm in negative cash flow of £100 a month, £200 a month, probably 200 is my max per unit right now. I would happily do that in the highest capital growth areas. People go, oh my God, Jamie, that's so silly. You're going to lose, let's say it's £100 a month. That's £6,000 over a 5-year period. It's like, yeah, I don't give a fuck, because I've picked a property in the area that's going to go up in capital growth even more. So think about this, like, if it's a 200 grand property, for example, and I get an extra 2% a year capital growth. Let's not take account of compounding here, which is where it stacks and it stacks and it stacks. That's 10% capital growth. That's £20,000 in capital growth over a 5-year period, and I've paid 6 grand for it. Would you invest £6,000 to get £20,000 tax-free over a 5-year period? If you said no, you're on the wrong channel. Now, is it guaranteed? No. Is it guaranteed the tenant pays you? No. Okay, but what I'm looking at is I've got a different financial consideration because I don't need cash flow from my properties anymore. So I get to access a different breed of boring vanilla buy-to-let property. The last thing I want to talk about is a yearly portfolio health review. If you are actively building a portfolio, I don't care if you've got 1, 2, 10, 1,000 properties. If you have got 1,000 properties, get in touch, I'd love to chat. But if you've got any size of portfolio, you need to be doing constant reviews. Doing them monthly, quarterly is just friggin' stupid, okay? That's not how property works. It's a long-term strategy. I don't think I've ever said friggin' on this YouTube ever, but there you go. So it's a long-term strategy, long-term investment, long-term assessments on this. But what you want to be looking at, especially as you build a portfolio and you've got a team around you, this won't be for you if you're in your first 2, 3, 4 properties, maybe. But say you've got a portfolio of 10. Wouldn't it be good just to do a health review where you've got 10 buy-to-let properties and you go, do you know what? I've noticed that this area where this property is, there's huge service accommodation demand, and I want to test it on that one property. And this is where, when you're building a portfolio, you can diversify into the more extremes, if you like, the cash cows of the property world without risking the rest of your portfolio. Because if it turns to shit and you get nobody renting it, it's not that big of a deal. It only represents 10% of your portfolio. So as you build this up, make sure you do your annual review of your property portfolio health checklist. A lot of people I talk to are in that sort of first 10 properties, even the first 1 or 2. Maybe that's you, by the way. If that is you and you're thinking, geez, there's so much information, There's so many property strategies. How do I know my risk tolerance? How do I even work that out? Then I'd love to offer something to you. And this is for every subscriber on the channel. I really want to offer something back to you. So what we're putting on right now is a free one-to-one strategy session. There's no catch at all. What's in it for me is at the end of that strategy call, if I feel I can help you build that portfolio, I'll offer to do that and tell you how much that will cost. But ultimately, I just want to add value. And if you take that value and go do something on your own, that's incredible. Now, we've got limited spots on this. If you want access, do one of two things. Put APG, which stands for Aspire Property Group, in the comments, APG, or I'll put a link in there. I'll put it in the comments and pin it to the top. Click on there, fill in your details. Spaces are limited. I can't help everyone, but I want to help you. On that note, if you did get value and you want to give something back, just hit that like button. Takes 2 seconds of your time, really helps the channel. If you're not subscribed yet, what are you doing? I want to help you, I want to add value. The way you can get access is just simply click the subscribe, the notification bell, and you'll be seeing me in the next video.